Hello, everyone, and welcome to another episode of CoinsCapture Media. And we are bringing your conversation with builders, innovators, investors, and thought leaders shaping the future of blockchain, Web3, and digital assets and emerging technologies. So, I'm your host, Etso Allen, and today we are diving into one of the most important shifts currently taking place in the digital assets industry. So, over a few years, much of these spotlights have been onto cryptocurrencies, NFTs, and more recently, AI. But behind the scenes, a different transformation has been quietly unfolding. The one centered around stablecoins and the financial rail that will fundamentally reshape how value moves towards the moves around the world. So joining us today is Jervis Pereira, well widely known as JP, Director of Business Development at TradeX Protocol. And JP works at an intersection of real-world asset tokenization, strategic partnership, digital finance, and blockchain-powered investment infrastructure. And he has been actively involved in helping bridge traditional finance with the next generation of digital financial systems. And in today's conversation, we'll explore around why the Web3 market, where the Web3 market is heading, why stablecoins are becoming a cornerstone in digital finance, and how tokenization is transforming investments and capital markets, and the financial infrastructure being built behind the scenes, and what founders and investors and institutions should pay attention to over the next decade. So, JP, welcome to CoinsCapture Media. It's a pleasure to have you with us today.
Thank you so much, Jetso, for the invitation. Glad to be here at CoinsCapture. I know that this interview has been a long time in the making from the various roles that I've been in, but always happy to jump onto a conversation with you and the team at CoinsCapture.
Yeah, for those who don't know, I mean, we have been connected since a very long time. A long time is a very, 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 very long time. And this is our first podcast, which we are having right now over here. So you can imagine the time which we have taken, a sweet spot time to get into it. But I'm glad that you are here and right now looking at the progress of TradeX. And I think this is the right situation and the perfect moment for us to have these steps of conversation as well revolving around it.
Certainly, certainly.
All right. So I'll straight dive into the question. So the first one is like, if we compare today's market to the previous cycle,
Mhm.
what do you think has fundamentally changed?
See, from a fundamental standpoint, what you realize in the Web3 market is that you've seen good cycles, super cycles, drops, and it's the same thing, right? We are here, okay, everything is gone, then you're back at, oh wow, the hype is back, and then okay, everything is gone, right? So at this point of time, we're a lot like that, and you can see that by the market cap dip. Right. So it had reached a peak of around almost 4 trillion. It's right now at 2.1. When you look at that, you follow the money. And when it tells you a very, very clear story, the last cycle, it didn't matter, so much about how you'd get revenue. It didn't matter so much about how much the infrastructure was actually going to be built. So you had a lot of money that was just flowing into something that would be able to make money, because I think that was about, already 3 cycles into the game. And people began to understand that, okay, if I place a bet on this particular company, I could make a tremendous amount of X, not just in percentages, we're talking X's, right? So after 23, you had a major crypto winter. You had a small spike that happened again, after the ETFs came about in 24, a small peak that happened somewhere around May and then again December. But that kind of, it didn't hit the highs that people were expecting, right? It just shifted completely. So when you talk about the market sentiment where investors now suddenly see value, right? Crypto has lost that element, but that's also because of a number of macros, that because crypto is a riskier avenue for investment. It's also lost those because of the macros are saying that, okay, there's a slowdown, there's things that are happening, the wars that took place. So these things began to shift investor focus to put money towards this industry as a whole. But what I see fundamentally changing, a lot of people are betting on the fact that maybe there is another cycle to come out of, another cycle that's going to happen maybe in the next year in 2027. We are waiting to see if that actually comes in. As we of course progress with the conversation, I'll explain why I'm saying that.
But we are right now talking about how people are investing, right? So there is one pattern which I noticed, like investor do focus on something which was way, become way earlier as well. Like it's an old one. So what is such narrative that these investors are still focused on, and what do you think is becoming less irrelevant? I mean, it's not relevant right now in the current scenario, but they're still believing it.
What is less relevant or people have moved away from very clearly are NFTs and metaverse, right? These were hyped in 21, late 2021. Pretty much everybody and their uncle were going to make investments in that, and we'd seen great runs where that's concerned. But again, that's always dependent on who's the next buyer, right? So a tremendous amount of value just got lost through that entire cycle. But if you notice the trends, what you'd also see is that you have a lot more, you still have investments that are steady coming into infrastructure. You still have them going into DeFi protocols, into payment rails, of actual services that are being built on blockchain technology. And that narrative supports the fact that the market cap for the industry is still high, right? It's not only about Bitcoin, it's also now towards the tech.
Mhm. So you talked about right now it's moving towards stablecoin and other things. So which are the current sectors which are attracting the most serious capital and the institution's attention?
So institutionally, I believe one of the sectors that still has a lot of value providing is in the RWA space, right? The other point is with using stablecoin rails and using stablecoins as a sort of backend between what a consumer would use versus what an institution would be able to get a hold of. It's not always easy for people to buy into US dollars in most countries. I've noticed that from some of the clients also that we have. But at the same time, the ability to buy and hold stable coins is easier across most countries. If you look at just the number of countries that have that permittable, right? And then how do they, of course, treat that from a taxation and a regulation standpoint? But it does become a lot easier to buy and a lot quicker as well to buy stable coins than it is to do something else. So if you ask me, thrust is going towards, of course, RWAs, towards the utility and stable coins where businesses are concerned. Um, how that's impacting and changing the landscape. And again, once again, I'll switch to DeFi protocols, which are able to give you good yield, actually good utility, and that's quite an exciting space because that is still where the technology gets anchored, right? It still makes a valuable use case where the technology gets answered.
Because what I see right now is many people like still think of stablecoin as a simple digital dollar.
Mhm.
And but why do you believe that they are becoming one of the most important innovation in finance?
See, every business, of course, requires funds, right? It requires funds, it requires cash flow, it requires sales, right? So when you look at this and when you look at whatever business activity is there, it's just a natural progression of being able to make it easier for a buying decision to happen, or for whether it's a B2B customer, B2C customer, B2G customer, just making that process easier. And that's the more that you solve for that, the more that you have clients who are can decide quicker. This is a business that I can put down in. I don't have to jump through so many hoops. The process is made easy for me, right? So that's one of the key reasons why I would still say that that experience actually leads to better business, which leads to the reason that how do I get this done quicker, right?
Okay, in terms of business, like which industry will actually benefit the most from these stablecoin adoptions?
One of the biggest investments I've seen, or rather, at least one of the biggest announcements I've come across has been what Meta and Mastercard have been doing, right? Because now it's the announcement that Mastercard is getting into the game, which was otherwise just popularly owned by Visa, especially where crypto cards are concerned. The utility is very easy, the ability is very easy. The number of the way that it's designed makes it very easy for people to be able to use. And that, I think, is in many ways a game changer, especially when it comes for foreign travel, right? Or utilities, say perhaps within a particular country, where you don't have to jump through so many hoops within the banking system to be able to utilize funds that you have, funds that you own, right? Classic example in India, for example, if you wanted to open a dollar account, right? There's a lot of things that you have to go through, or you have to get your settlements that come into the local currency, and that's the normal channel by which it's done. Uh, Using stablecoins begins to make that process quicker. And of course, I once again come out with the fact that you do it in the regulated form, use whatever legalities are permissible. I'm just talking about the utility, right? I'm not going into that space yet. But in terms of utility, super easy, right? Becomes very convenient. You don't have to worry too much about on-ramping, off-ramping. Yes, there is a charge, but it does make the process flow easier. And that, I think, is one of the things that has solved the issue for Web3. Because Web3, whenever a native gets into the Web3 space, one of the biggest hoops they have is, okay, I'm looking at a wallet. How do I, put money in? How do I put money out, right? So if they're not on just a regular app, if they have to figure out a way. It's like, oh, okay, fine. So I have to do this. Oops, I've used the wrong chain. I've lost everything that I've sent across. Right? Happen to a lot of us. Or you need somebody to be with you. So once you get over that hurdle, that's of course something that eases this entire process.
Yeah, because so these stable coins payments, as you said, that on ramp and off ramp as well. So how do you see these impact in cross-border payments, remittance, and treasury management and global settlement? Because recently, I mean, if you see in India, we had issue of ED getting into these on-ramp and off-ramp providers like transaction other people as well into picture. So what do you think exactly, and how these coins will proceed with regulations revolving around each different countries in a different way?
That's quite a broad question to answer from a few standpoints, right? There's the commerce part of it, there's the regulation part of it, there's the legality part of it. And I say regulation when it comes to the mobility of foreign exchange.
Mhm.
So when you look at these three elements, right? In India, there is a permissible way to comply with all three, right? You get through your regulations, you get through the right kind of partners to be able to do that. And I watched this tweet that uh, Aritra had put up. Gosh, let me wait. Pause a second. Edit this part out, but I'll tell you his name. It keeps slipping off my tongue the wrong way, so I should say his name right, because due credit to what he has shared. Uh, where is that one? Uh, have you watched that tweet, by the way, from
Mm,
the one where this is the one that Aritra, right? Aritra. Okay.
Aritra.
Yeah. So when you look at these three, the synergy of these three places, which is from the commerce part, the compliance part, the legality part. Aritra had put out a fantastic tweet regarding how you can stay compliant in being able to do that. Right, you find the right kind of partners, you go through the right kind of channels to be able to do that. When the ED cracked down on the four companies that were there, the report that came out, right, and this is purely from the news. There could be more information that's coming. I haven't been updated, to be honest. But from what had happened was they were involved in something that was not entirely within those permissible limits, which is why that the entire issue came up. So in terms of utility, I believe it solves for a lot of issues. Keep in mind, right, that buying a stable coin is the equivalent of buying a virtual digital asset. It's not entirely buying foreign currency,
Correct.
right? So there are certain regulations that it falls within a box of, and there's certain things you are permitted to do, certain things you're not permitted to do. So as you utilize one of these tools, you need to read the manual, right? So being able to find exactly where that fits is something that each country is required, or a person, a resident, a tax resident within a particular country, or a citizen of a particular country needs to get compliant with, right? But if let's say that you've solved for all that, or you've already stayed within that compliance point. Now, what does that open up? It opens up quicker settlements with a limited loss. It opens up faster transaction times, which when you think of human to human interaction, that's one. But when you think of multiple settlements from companies, that changes the scale of things that you can do, right? And this is applicable across logistics. It's applicable across travel. This is applicable across, any sort of good movements that happen, goods and services movements that happens across the globe. You're shortening that time. So there is a lot more benefit for every company to be able to apply that, right? So because one of the key things that kill most businesses is the fact that, okay, no, I've got a 90-day a 90-day credit settlement time, 45-day credit settlement time, right? But in the meantime, you need to manage your cash flow, right? So how can you make that process easier? And most of the time, it's not because it's not that they don't have the fund. It's just because that the fund having to move from one place to another place through banking channels alone, right, is a lot longer.
Longer, right?
So if there is, and I'm not talking about this, of course, in India, let's put it out there as well, that accepting stable coins for payments of goods and services within the country is not permissible, right? It's not accepted. And that's the law of the land. That's fine. Other spaces may or may not accept it. And where it is permissible, it does happen with a lot quicker settlement.
Completely agreed. Completely agreed. I think that's another perspective of getting into all those things which are happening around us right now.
True. I
And
believe that's why Visa got into the game, right?
true, 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 true. And we have one more. We discussed about tokenization as well in the beginning, and how we felt that RWA was another thing which was likely booming up. So to be honest, like I feel tokenization has become one of the biggest discussion in finances right now. But what are you seeing on the ground? Exactly what's happening with respect to RWA and tokenization?
See, RWAs and tokenization, where I see that, they've helped tremendously. Of course, one of the biggest signatures is when it comes to land, right? Dubai is has a fantastic use case where that's concerned. There are other properties in various other countries that are being able to leverage and utilize that to improve what's happening within their real estate, the real estate within that particular country, right? At the same time, you can also keep it. If you look at what an RWA actually does, right, and how you can leverage that at a quicker point of time, there's an entire financial world that a lot of people don't have access to,
Hmm.
right? Like you don't have access to, say, commercial paper. You don't have access to company deposits. You don't have access, and these are, maybe even bonds for that matter, right? They operate at a different market because they're not meant for retail users, right? And this is just the standing as it stands. But those also represent certain opportunities that people can put into their portfolio, right? Now, RWAs solve in many ways how that, the accessibility of that particular channel. And that it gives choice to more people who want to make investments, right? So whether you buy, say, you get fractional ownership of properties in any part of the country, right, or into a different country, you have access to that now because of RWAs, because you can buy into a token there. You can utilize that for maybe you want to supplement your portfolio or your investment holdings with commodities in some way, shape, or form, right? Future contracts. You can utilize all of that, even buying into funds in fractions that already exist, right? So it the underlying concept of where this could be applied can go across the board, right? Keep in mind, it's a tool based on a certain technology that makes for the market. So there's two parts. One is the tech, and one is, of course, the market, and then how the market responds to that tech. Yeah. So where does the RWA segment fit? I think it will open up a lot of opportunities. There are, for example, when I was in marine design at one point, what I realized was there were a lot of yachts that were being built for Chinese business people, and
Okay.
the way that they would buy so many of them was that a group of five would get together to be able to buy a yacht, right, and then timeshare it, and then so they your cost has gone to a fifth of what it actually is. The maintenance goes to a fifth of what it is. So if there's five of them that are buying it, that's exactly what happens, right? and it becomes a lot more affordable, makes a lot more sense on feasibility. You don't have a white elephant, it's the costs entirely become shared. And that supplemented an entire industry, by the way, right? So it infused a lot of demand within that industry. I believe RWAs are going to work in the same fashion for assets that a single person will or a single institution may find difficult to own.
But when we talk about cost, can these tokenization generally improve the liquidity in the traditional illiquid markets?
Definitely. So long as they're marketed well and it is categorically clear, right? What it is that they're offering. And then when you are able to see, one of the beauties that I found about Web3 is the fact that you can have a smart contract that gets applied, fixed by time, not required by person to be able to execute certain works,
Mhm.
right? So let's say you buy into an RW and you say, okay, I want to hold it for 3 years. This is what I want to have done. I want to liquidate my standings by the time that either a price moves up or, by this particular timeline. Done. You're not waiting on, okay, fine, what's going to happen further down the line. It can happen a lot quicker. So it's really about the application that you can use for the utility of what the market wants, right? And the more that you solve for that, the better. Of course, just so you know as well as I do that in this industry, you're going to have hype, to the stars and beyond, to every multiverse that
The
exists.
moon,
That hype can get built.
multiverse, everything.
Yeah, but the industry is the industry, and and that's what that part is. But when you look at, say, 7% of the entire world owns, has any exposure to crypto as a whole. So what about the remainder, right? What's happening to the 93%? They have access to a different system using certain products. Now you can supplement what they can, they can add, and that's where you create value.
True. But how do you see these tokenized assets impacting the commodities and investment funds?
So for commodity and investment funds, I think so. It's like, um, okay, at a point of time, if I want to buy, say, a Ferrari, right, and I don't have the funds to buy a Ferrari, but the number of days that I can utilize that Ferrari kind of just goes to, say, 3 days in a month, right? Because I've got other activities, so I maybe get this time on the weekend. If I can pay a fraction of that, right, to have access to something like this, why would I not, right? That's an experience that I can buy into, or that's an investment that I would see that is of value. I see the same thing that happens with opening up liquidity to the retail market or to more markets if it's packaged in the right way, quite easily using RWA as a channel, the access to buy into an RWA as a channel, because the retail market will always have a good wealth of not just demand, but also they would want the novelty of something new, to be able to at least try. Right. And then if it works for them, you're going to have that repeat. Right. And usually that rate is around anywhere, if it's done right, comes to about at least about 65 to 70%, which adds that much more liquidity to what you want to, to your business.
And will this blockchain eventually become a part of mainstream capital market infrastructure as well?
See, it already has, right? It already has. When you talk about CBDCs, that's exactly what you're saying, right? And you're seeing governments that are putting investments into CBDCs, right? The national banks are doing it. Just the other day, I think was it yesterday that it came out that already for the rupee that they're trying to do, they've done it. They've got I think a few thousand crores that in transactions that have already happened. Right. And that's fantastic. So that moves, that is a testament to the blockchain technology, to the utility where that's concerned, because the end user, and this is also true with the IT sector, with products and so on, the end user wants an ease of utility, right? If I have to, you're in the tech space, if a customer has to jump through multiple hoops, open multiple pages, click multiple buttons, you've lost half the battle,
Yeah, true.
right? But if they don't maybe fully, not everybody fully understands everything. So a client or a customer may not entirely understand the background of the tech, but if they find it easy to use, right, that's exactly what they do.
Completely agreed. Because it's all about, at the end of the day, I mean, even in tech space, like we see it as a user experience.
Mhm.
So it's always called UI UX.
Yes.
So experience comes as a priority. So if you are making them to do any kind of extra steps or do anything additional, oh yeah, there is a drop. So they might leave it at the end of the day.
It's the same reason that you have such loyalists when it comes to phones, right? If you know how to operate a Samsung, you're not going to go to an Oppo easily or this because it just has different thumb movements.
Correct.
It's remarkable how people stay loyalists because okay, fine, I don't need to do much.
It's true. I mean, same goes for, yeah, I agree, completely agree. It's goes for any kind of social media as well. If you swipe up, so it always goes as a motion. You
Mhm.
go in a same fashion, and every other apps which follows it also follows the same procedure.
They do indeed. They do indeed.
True, true. So now we talk about your institution's experience as well, because um, you've been into this institutional area for quite some time. So what are these institutions actually looking for before entering into the digital asset space?
Just so I've worn many hats throughout the last 20 years, which is why I don't have any hair. So when you say so when you say institutions, could you specify which type do you mean?
Um, anything, any institution, let's say any kind of Web2 industry, or those who are entering into the digital asset space, and any other traditional markets or infrastructure, or any kind of um, any space, construction space, where anywhere people entering into this space, the digital asset space. So what actually are they looking for?
The long and short of it has always been the money, right? They're always looking for a capital infusion. That is the basic that is the underlying perspective, right? But in terms of how that actually gets translated into something that can work. Now, when it comes to the digital asset space, uh, there's been a rise of, and I believe it was the CoinDCX report that came out sometime last year, right? With the institutional buyers when it came to holding Bitcoin. Right.
Correct.
So this is one particular case, and people started adding that to their portfolio because they recognize that okay, fine, it's a digital asset. At the end of the day, it improves my portfolio, gives me exposure. The Grow app, for example,
Mhm.
alongside your FDs, your mutual funds, any other, even foreign investment stocks that you could buy, they had at that point of time supplemented by Mudrex. The ability to buy on that app, you could buy a crypto asset, right? That feature is no longer there, but it does add weight to the fact that it was now considered, an asset class that you could add to a portfolio. And I believe that that part is extremely important because it changes a buyer perspective, right? Uh, and again, ease of accessibility within that framework. So where do we see of what institutions want? Institutions, if you're saying about from an investment, from an investing institution standpoint, clearly they've understood, they've studied the market, look at how much value that could add, how much it could add to their bottom line, what's the value in terms of holding it onto your balance sheet, right? There have been great cases that have been made for why you should have that, right?
Mhm.
Right now, I think also in the very fact that you can hold stable coins to be able to supplement and improve your portfolio works tremendously, right? I mean, we have, for better or worse, the dollar is appreciating at an average of between 4 to 6% year on year. So just the ability to hold that also supplements your overall portfolio, right? It's a given. Now, what are institutions looking to further invest in where this entire tech is concerned, where the utilities of this could be, is for better liquidity, right? It is extremely cumbersome to be able to go through an entire legal process of just buying. If you buy an apartment, just take a simple thing, right? A heavy investment that is buying an apartment. Banks, due credit to them, have tried to make it very easy with the loan process, right? And the registration requirements and so on that you would follow through and the costs in everything, it takes a lot for one person to be able to get into that, or maybe like a pair, like a couple buying a house. uh, Picture this, right? That process is done, that cost has gone through, right?
Mhm.
But now you have about 20 people that could possibly pitch it to be able to utilize a particular asset, right? Think of a space that is on in the mountains, which has a penthouse, which is a sort of a penthouse that has a fantastic view, lake view. You can see the clouds right there. If you put your hand out, you're touching them, right? You're not going to live in that space 24/7, but you want to utilize it the same way that you would do a hotel room within certain fractions of the year, right? Now you have the ability to own it and schedule yourself to do that. So it's a mix of being able to buy that with timeshares and so on as a model, but the cost of being able to do that is now 1/20th of that entire, or maybe 1/20th of that entire number, right? That's brilliant. So yeah, so for again, that I know that case is purely for real estate, but if you look at the applications where institutions again want to make investments, they have access to now. Um, I'll give you another case, right? Uh, there are cases where you can buy lots of stock. Lots of stocks, right? Lots in lots,
Lots, yeah.
and and the entry level to that may be anywhere from 50 million and over, right? Where you can get that at a great discount. Now, imagine that being tokenized, where you can buy into fractions of the entire thing. You have one promoter that's saying, okay, fine, you don't buy the entire lot. I've got that lot. You can have X quantum, within a permissible range, like a minimum lot size of say $100,000. That
Mhm.
makes it a lot more accessible, right? So these are some of the use cases that are in the industry at this point ongoing, where people can utilize them. I won't limit say that station may not be available within India, but it has already been proven across Europe, across the US, to be able to use that as a method. Even if I'm not mistaken, I've even seen that in South American companies doing the same.
Hmm. True. But at the end of the day, it comes with challenges as well, right?
The challenges that arise come from two particular sources, right? One is, if you have access to it, what are the laws of the land within that framework? Okay, so what are the laws of the land? That will always be one of the key things to take considerations for, because it does two things for you. One is, um, is it accessible, but then do I fall afoul of any compliance or regulations to be able to do so, right? So that's a question to ask. And again, this is individual for each country. Some countries it's permissible, some countries not. So any investor, of course, buyer beware, right? At the same time, does it make it easier? Can the company that's offering that, or can the promoters that are offering that, make that as seamless as possible while staying compliant, right? These are things that a buyer has to, of course, also check, and a company has to be able to make that entire framework easy and accessible for them. These parts, I believe, in to be honest, I think about 90% of them solve for these cases, right? There are 10%, sadly, that get the 90% of exposure about how it didn't go right.
Correct. So, how do you think, and how should an investors think differently about Web3 today and compared to Web3 in 2021?
Oh boy, 21 to today. 21, you had actually, sadly, in 21, you had only about 3.5, 3.8% of the world's population that had any sight on crypto. Now it's gone two times that number, and it's extremely popular, right? But if you're talking about whether in purely within India, or you're talking about it globally,
Let's take
I
global.
let's say globally, right? Globally, crypto is still an asset class. It's losing value at this point of time. Like Bitcoin went, joined the 58K gang, right? But will it lose its value overall? The answer is no, right?
Hmm.
Um, One of the key tenets to the technology where this is concerned is the fact that it's not only about the hype, but there are other sectors within the entire industry that add value. And sadly, while one of them is the hype around prediction markets, right?
Hmm.
It still is one of the biggest draws to the industry, right? People still want to have some access to that action. So um, how do I see that 21 to now? People are, of course, I mean, we're talking about institutions that are investing. Those guys we have become more cautious. At the same time, about where investments go. So again, it's going to go down to how well the team is structured. It's going to go to how well the offering is there. What we've seen over the last three cycles that could possibly be that have potential that the market would take, right? But the biggest change, the biggest pivot that has happened is now VCs are looking for two things and investors are looking for two things. One is, do you have actual traction? Right? Not no longer the vanity metrics. It doesn't matter how many followers you have anywhere. It doesn't matter what you're showing as, engagement farming that you've done. None of that matters anymore. The few thing is, do you have actual traction? That is actual people who are users. And the second point from that is, do you have actual revenue? These questions are being asked, or rather have been asked since mid of 25 within the industry. And they shaped the way that, the last $13 billion have flown into. If I look at the last 12 months, the last $13 billion have flown into this just by making sure that these two questions were answered, right? It's no longer about, oh, listen, I have a white paper, I have a website, I have a pitch deck, here's $10 million. It doesn't know. No, it's no longer there.
So now, what do you think? What signals do you personally look when you evaluate a new project or opportunity?
So new projects and opportunities right now, I'm I'm bullish on DeFi, to be honest, because I believe that DeFi is still, in the graveyard of all the projects that came out of DeFi, right? There was a lot of great ideas, a lot of good tech that got built around them, right? Which may have not had the best execution in the market, or it may have finished its hype cycle and then, suddenly realized that we've either become too cost heavy or we've not really penetrated the market well enough, right? And I believe that still within that framework, you have the opportunity for great global commerce. Yep. So if you ask me, for me, DeFi is still something that I would spend a lot of time trying to evaluate. Those are the kind of projects I've gotten off. Anything else that is purely hype based, I do see that there's a lot in the prediction market space that people are coming up.
Mhm.
Interestingly, I'm seeing a few projects that are there in the mental health space that
Mental
are
health
coming up.
space.
Yeah,
Okay.
that are coming up in the Web3 space, right? Uh, I do see a lot of merit in that. I need to understand a bit more of how buyer behavior will go within that framework, or
Okay.
user behavior will go within the actual number of users. But yes, that is something that I'm keeping my sights on as well.
No, that's great. I think it's it's called something. The term is used something like neuromarketing or something. I'm not sure. Silo marketing.
Okay.
Yeah, I think that's a term which has been used. That's quite interesting field as well. Uh, Great to know. So like right now, let's say if you are allocating a capital today,
Mhm.
like which sector would you be watching more closely?
So yeah, so like I said, within the Web3 space, if I'm looking to deploy capital, DeFi would still be my number one pick. Um, if it's the right kind of infrastructure project that has real world applications, then yes. But those are my top two. I'm just gonna stick with those. I'm not no longer bullish on like I've completely just moved out of considering anything that's AI based. As much as it, I believe AI sadly is going to be something that we will see a lot. We are seeing a lot of hype towards. A lot of expectations are being built. But in the long run, the sustainability of being able to hold that is looks like it's going to be another bubble.
But like since we talked about AI, so AI right now is currently dominates in most of the technology discussions.
Mhm.
So has blockchain been overlooked because of the AI hype, or how's it?
Yes, in many ways, I believe that AI has taken away the spotlight from the crypto market as a whole, for better or worse. Because now, once the spotlight is off, all the overhyped, Web3 based projects that came up or the companies that came up, they've realized that we have to do something different, and we have to do something that's more tangible
Hmm.
in terms of being able to obtain revenue, right? It's no longer, okay, fine. No, no, take my token, I'll stake it and then we'll do token buybacks. So we'll if you stake it, you'll get X amount as an APY. I mean, where is the underlying value for that? right? So while AI has moved the capital share, while it has moved the mind share, while it has moved the spotlight share completely onto itself, I think that this is a good time for the Web3 space to really work on what the technology was meant to solve,
But
right?
could AI
So
accelerate the adoption of blockchain infrastructure overall?
um, I'm not entirely sure, to be honest. I can't say it with anything definitive that it will. I believe that it will. I can see, as a matter of fact, that it is going in a trend that is focused on its own vertical, very well, in many cases, right? Look at Twitter, and the quantum of questions that Grok gets asked is tremendous. Yeah, including the quantum of memes that says, "Okay, please, I can't take this anymore." Right. So, so we are tiring it out, but I believe that that also makes for a very good use case from the macros point of view, right? Where are the components going to come from? Where is the energy going to come from? Where is the setups going to come from, right? So it's supplements. So while the utility is on one small microcosm that we're looking at, the entire things that support it is being built as well. And I believe that that's really where the AI supplementation will stay, because those infrastructure builds are going to get mobilized or remobilized or repurposed, right? Due to the fact that it's got certain amount of tangibility, and it's adding a lot of value to what you and I are just interacting with.
So one more thing which we are more focused on right now is the investing infrastructure.
Mhm.
So what do you think is fundamentally broken in today's investing infrastructure?
Uh, I think fundamentally what gets broken often is the lack of opportunity, right? And the choice of financial products or avenues to make investments in, right? Uh, I'll give India's case, for example. India's case, until the Harshad Mehta scam that did happen in '92,
Mhm.
people didn't want to invest in stocks, right? But at the same time, FDs were in double digits, right? You could look at 25, 21, 17, 18% as an average rate, or somewhere around 17 to 18% as an average rate of what an FD would deliver in those years, right? Today, you're lucky if you get something in single digits, and then after tax, it goes even further. So, uh, where I believe that this would make a difference is people's access to opportunity. So, what used to only be available for UHNIs or certain category of investors, it's now opening up. And this is again what RWA solves for, what the technology solves for. Um, those opportunities, I believe, will help a lot more people have access to beyond, oh, I can only see mutual funds, I can only see ULIPs, I can only see stocks, I can only see FDs. And now the bond market has opened up, right? Because as much as people make investments, there's also equally the risk of loss within a certain framework, within a certain time frame, and you have to factor for that. So there's some that if you understand them, they're great. If you don't understand them, then you could lose money anywhere, basically.
But if you could, actually redesign this capital market from scratch, what
Mhm.
would it look like?
uh, I remember this. This is an age-weighted reference, right? From my side, not from yours. But I remember once reading in a Reader's Digest, if for those that still remember it, was a brilliant magazine. That in this would have been, I think, either 91 or 90, between 91 and 92. That one of the best growing investments in foreign exchange was in the kronia, right? It wasn't in the US dollars, it wasn't in the pounds, because the percentage that it had grown just by holding in that particular year, across a 5-year horizon, was way over holdings in any other foreign currency. And I was shocked to find that out, because I said I don't even know which country that belongs to, right? So, but at the same time, it also struck me as something that if I wanted to even buy a dollar, I didn't have access to it, right? So, illustrating that particular point, like even for example, if I know that I want to get into to buying, if I want to get into the coffee game, and I see the trend across coffee. Now, what is my avenue as a common person to be able to do that, right? It doesn't exist to me, right? So how
Hmm.
do I make a plethora of these things available for common people to be able to have access to? Because that gives you opportunities, right? At least if you have the choice, it's a good thing. Um, but that's what I believe. So if I would look at the capital markets being better than how they currently stand, being able to have access to opportunities is where I would always bet.
And how do you envision the investor experience evolving over the next decade?
That's a good one. To be honest, I think that with between RWA tokens and the potential for the NFT technology, right, to come back, not just the PFPs, but the NFT technology in itself to come back, to give you access to with, for example, a time limit on what it is that you can buy. I think that would open up an awful lot. And one of the key reasons is that a lot of people are spending a lot more time now going through courses that are quant trading, algorithmic trading. It's opening up, while it is the utility is just that microcosm that, oh, if I trade the stock market, I can make some money. What it also does is the same thing that happens when you see crypto from the outside. You buy a little Bitcoin, you invest a little in Bitcoin. Suddenly, your perspective changes. Now you suddenly want to dive deeper.
Hmm.
So I believe that right now, while all this trading aspect is happening, people may be winning, people may be losing. That's just the market. But the education that comes from that is something that will open up a lot of avenues for a lot of people. And I mean this not from people in the metros. I mean this for people who are in the tier two, tier three cities, those that are getting the ads by scrolling their phones in villages as well. Because that's where the hunger for opportunities comes from, right? In the metros, most people are too focused on their routine, their current jobs, because and of course, that's important, right? But at the same time, it gives them less time for expanding a horizon or maybe diversification of time.
True, true. Agreed. I think I've seen more people on the tier two, tier three cities coming up rather than the tier one actually on the metro cities. So that's completely agreed on your part as well. So I have one interesting question. So if
Sure.
you were to start a company today,
Mhm.
what sector would you build in?
Uh, what sector would I build in? I'm going to go out on a limb and share with you what my retirement plan is, right? My retirement plan is street food,
Street
right?
food.
Street food, man.
Okay.
For me, it's a winning combination because it's a service at the end of the day to people who are hungry, and that's something that I philosophically I want to get behind. But at the same time, I recognize that as a great business model, so long as you have the right, you've been able to lock on the taste of your market, right? I'm a foodie. I love food, so for me, it's just a natural extension of what it's doing. My first thought was to open up a Baroda Vada stall, right? You can't go wrong with that. It's
Yeah, true.
India's most popular food, north to south, east to west. Everybody knows, okay, what's a Baroda Vada, right?
True, true.
One or another. Right? So, but yes, if I were to start a business myself, something that I would want to spend some time on, that would kind of be it. I know it's not in completely the Web3 space, but if otherwise not, then yeah, I would look at, let's say that being in the Web3 point, again, I would look at something that would be able to do what we've been speaking about, right? Make those opportunities easily available for everybody. Through Make investment opportunities available for the world at large. For example, you buy into a token that you buy into an NFT, right? An NFT is linked to a plethora or a different broad spectrum of assets. You stake it for a while, you're able to get a return based on what liquidations happen across those assets within a certain time frame, and it becomes very clear. So that's what I would want to build.
I don't know, maybe your food stall can also have a supply chain tracking based on blockchain itself, so that you can completely add it as an infrastructure layer. So then you pitch that as an infrastructure for food instead of your food stall.
Or I mean, when you go across different different states, right? In India, for example, why I use India as an example is because you'll see a vast amount of diversity from status, from cuisine to architecture to,
Mm.
the rules of that particular space. But when you travel across India and you go not just to the metros, you go into the actual villages, right, where people sometimes don't have access to healthcare easily, or the infrastructure by road is you have to get down in one state and travel to another one, right? Um, if you're flying, so when you look at the infrastructure that is within that framework, you begin to realize that there are multiple segments that you can access, which, if you position your product or service correctly, you are able to reach out to that untapped market. And I believe there's a large blue ocean there as well, right? It may not necessarily be large. Okay, fine, I put in just this quantum of effort to do that. But if you can figure out what is the right positioning within these spaces, you've got a winner. You've got a winner. That is the actual India story for me.
Good to hear. So, what opportunities in Web3 do you think founders are still overlooking, and what mistakes these startups are still making in today's market?
The first one is they haven't figured out uh, a lot of them haven't figured out what is your VC's investment thesis, right? It's not about being able to buy an active list and then sending them cold emails. There could be a strategy based on that within a certain within certain reason, right? But at the same time, if you are aligned in a sector with a VC or an investment institution that invest in your sector,
Hmm.
that's the first alignment you have to look for, right? A lot of founders don't. They're going behind the brands. Oh, I want to go to Dragonfly. I want to go to, Spartan. I want to go to Animoca. It's like it's only these guys that will do justice to me. Mm-mm. You could find the right kind of angels. You could find the right kind of VCs that actually invest in what you're investing in, and it doesn't take much. It's a study, right? Go through what they've invested in. Look at what have been their successful projects, which are the ones in their portfolio, right? You have to understand this, because otherwise, what you're doing is, it's like, when kids are on during Valentine's Day, or something, it's like, go to every person in the opposite gender and say, will you be my Valentine, will you be my Valentine? And it's like, nobody feels special with that, right? Nobody feels special with that, right? You're giving roses to everybody. Okay, will you be my Valentine? It's not that kind of numbers game. You have to actually spend the time to be able to forge that relationship, see what it is that they want. And I think that this is one mistake that founders, not only in the Web3 space, but even with startups and so on, in the regular tech space, in every different sector, right? You have to look at where is the value to the other side and align that.
So, what would be that one piece of advice you would give every founder building in Web3 space today?
Look for your revenue, right? You don't always need a VC, you don't always need an investor, but what you do need is a customer who will buy your product, somebody who's putting money down. This is a fundamental point with every business, right?
Hmm.
Uh, Most people think of, I need to have the scale of a Flipkart and I'll have a 10-year burn rate and so on. No, you have to be able to say that if I'm hustling as a founder with my other, maybe I've got one co-founder, I've got two co-founders. If I'm hustling with that, what's the burn rate that I can keep to a minimum till I get my client, right? I need to look at what's my cost of acquisition till I get my client. I need to also understand what does the client need before I actually start building something?
Hmm.
Not the other way around. Like, oh, I've got this fantastic idea. I built this great technology and it can solve the world's hunger. But, at the other end of the spectrum, you're going to people who don't want to solve world hunger, right? So that's a major misalignment.
True. Okay. JP, are you ready for a rapid fire round?
Oh, goodness me. Yeah, sure. Let's go for it.
Okay, sure. I'll start with it. Okay. Stablecoin or CBDC?
Stablecoins.
Most underrated Web3 sector.
DeFi.
Most overhyped narrative.
AI.
One trend investors should watch closely.
Um, Infrastructure.
Biggest opportunity in the next 5 years?
I'd still say infrastructure.
AI or blockchain?
Blockchain, any given Sunday.
One thing founders should stop doing.
I know this is rapid fire. Edit the the time for which I answer this. But I can think of so many things, to be honest. I can really think of so many things. But find customers. Sorry, they should stop doing, right?
Yeah, stop doing.
One thing founders should stop doing. Stop building for yourself. Please build for a problem that you're solving.
One thing a founder should start doing.
Look for clients who will actually pay you.
Bullish on tokenization, yes or no?
Yes.
One market you're watching closely.
Coffee.
Great, then I think you need a supply chain on coffee right now.
Very much. I mean, there was a fantastic project called FarmScent. I've lost touch with the founder, but those guys were doing great stuff. They were building on peak. They were solving a real issue. I've lost touch with that founder, but that's a project I really, really like.
Great, great. So I have a last question for you. So
Sure.
if we fast forward to 2030, so what do you think will have transformed global finance the most? AI, stablecoins, tokenized asset, or blockchain infrastructure? And what is the market underestimating today that will
Mhm.
seem obvious in the hindsight?
See, 5 years from now, despite the hype, I see AI being able to create a lot of solutions for end users because it does solve for a large point of the UX problem, right? But at the same time, within that 5 year horizon, I would still say that AI will have made an impact, but I do see that the between the RWA space there will be much more adoption. And the reason I'm saying this is because if I look at when it started till 5 years from now,
Hmm.
right? If I look at from where it started, the cycle seems to be coming to a certain point of maturity where adoption becomes easier, right? AI is the quick runner. DeFi is infrastructure and DeFi are slightly slower, right? RWA even slower. But from the point that it started to where it's going to see a little maturity, I believe that's where you're going to have. Stable coins are going to continue to run. They're like blood flow in your veins, right? So they're going to keep running. Again, more utility will be introduced by virtue of what it is that they're doing. So, but yeah, biggest impact in my opinion would be within our RWAs, how the DeFi acts with that, and AI to put the spotlight on this entire thing.
Perfect. I think, JP, thank you for joining us today and sharing your insights. And one of the biggest takeaway from today's discussion is that while much of the industry attention is focused on headlines and narratives, some are mostly transformative developments are happening quietly in the background through stablecoin, tokenization, financial infrastructure. And the future of Web3 may not definitely be speculation, but the infrastructure that enables value to move more efficiently, transparently, and globally than ever before. And to everyone watching and listening, we hope this conversation has provided valuable insights and opportunities that lie ahead of the founders, investors, institutions, and innovators. And if you enjoyed this episode, don't forget to subscribe to CoinsCapture Media, share this conversation with your network, and follow us across the social channels for more discussion with leaders and across the global digital asset ecosystem. And this is Jetso Anlin on behalf of CoinsCapture Media signing off. So thank you so much for joining us, and we'll see you in the next episode.